Another day, you guessed it, another record high for stocks. Yes, the Dow ended lower, but earlier in the session, it broke above 29,000 for the first time ever. Everybody, though, seems to be buying into the big caps. With all the money going to the massive, small caps are being all but ignored. They are lower on the year, and this is random but interesting. The Russell 2000 has not hit a new record high since mid-2018. At some point, they're going to stop the music, Guy Adami. When they do, tell us why small caps are being stuck in the mud.
I think that's a fair point. It was actually August of 2018. The IWM that measures sort of the small caps topped out around 174. And quite frankly, we haven't gotten anywhere close. I think recently we breached 165, but we're still significantly off those all-time highs with the S&P now making all-time highs. I do think that's problematic. You can make any number of arguments. Maybe the Russell is more emblematic of what's going on in the real economy. I don't know. But I will say this. I happen to believe the Russell could lead the broader market by a couple months. And if the IWM is rolling over here, I think that's potentially very problematic for the broader market.
How problematic?
Well, how problematic? I mean, that's a great question. I think anywhere from 10 to 15% is not out of the realm of possibility, given the backdrop that we've seen. We talked about it last night quickly. 20 metrics or 20 valuations, depending on what you look at, are at levels we haven't seen on the overbought side in 20 years in terms of the broader market.
It's interesting that Guy says it could be a leading indicator, because if you look at the components of the Russell, it's about 10% banks, 10% REITs. And the banks in this are small cap regional banks that actually correspond very much with the yield curve. So if you look at KRE, which is the small cap regional ETF, and you overlay that on the 210 spread, it's almost a perfect match, those two charts. There it is right there. Look at this year. It's almost a perfect match. As the yield curve steepened a bit, those banks went up, but they haven't hit new highs. So if you get a flattening yield curve and the Russell starts to roll over because the regional banks are rolling over, that could be your leading indicator. Later, let's call it end of first quarter, second quarter, that might be your leading indicator that things aren't all
Why can't it just be as easy as this market is traded off of big cap tech, big macro stories, the same playbook from 2010 to 2018, and everyone said, this is what worked, this is where I'm going to stay in, and maybe the economy isn't so great. So why do I want to go to IWM?
Well, I think you're right, Steve. I think certainly when you look at where investable market cap and capacity for big hedge funds and passive investments and ETFs goes, it goes there. But Brian, I'll take I believe it was a metaphor too. You talked about when the music stops, Guy will get in there, but make it a metaphor. The music stopped for small caps effectively in Jan of 2018, and that was that blow off top, which was really stopped by the trade war. Small caps need high growth environment. If you look at the outperformance of the small caps, it was really during the first phases of the Trump presidency, and then also when you got the tax dynamics, which were supposedly fueling the economy. It's when we had a more aggressive Fed in the picture. Since the Fed has pivoted, kind of strange, right? Small caps have underperformed the S&P by 12.5% on a one-year basis and almost 18% on a two-year basis. And I don't think that
at the same time, though, trade has gotten. Go ahead, finish your question.
No, because here's the thing, Tim. They exist in the same economy, mostly, okay, with the exception of the Googles of the world that have created their own economy in some ways. Small caps, mid caps, large caps, they all exist in the United States. We could say, well, the big caps have got the international component. Well, guess what? The international markets have been weaker.
Been so good.
They haven't been as good. So either small caps have just been left for dead because people are just buying all the same ETFs, or there's some sort of economic story we're missing here.
Well, I think that's it, because while the economy is not going in recession, and by the way, a lot of people missed that one and said that's where we were going, we're not growing at 3%. We're going to struggle to grow at 2%, and we may be sub that. And I think the small caps are ultimately emblematic of the real economy. And the small business, by the way, has a lot of headwinds. Look at the labor force. Look at taxation. Look at real estate. Look at commercial real estate. The small business owner right now is in a very difficult place.
But I think it's a product of where you started out, where the ETFs are going, where the money's going. When people invest in the marketplace, they don't shoot for the IWM. They shoot for the Qs. They shoot for the spiders. And trade was the major headwind. If that is dissipated, people got out of those Qs, out of the spiders, and now they're right back into what they were in before.
But are they buying them because they're a better economic story? Are they buying them because everybody else is buying them?
Because they lead the market. Everyone does this all the time. The
buying.
same 6 stocks or the same 8 stocks
all the time.
You know what
we talked about today?
Direction.
I'm sorry to get all worked up about it on a Friday about this guy, Adami. You know, the top 5 stocks in the S&P 500 are now 17.5% of the index. The other 495 make 5 stocks are running the show. Period. We've never had this kind of sort of toppy, heavy imbalance.
And I think in your comment, I mean, I think you find that problematic, as do I. But that's quite frankly been true now. Steve can speak to this for the last 6 to 9 months, and the market hasn't had any problem with it. This is not a story until it is. And again, getting back to an earlier comment, there are a number of different metrics, 20 to be exact, that are flashing red in historic ways, yet the market doesn't seem to care.